gold sustaining above $3,000 an ounce to me is more of an S&P 500 put, meaning a good food to feed that bull would be the stock market going down. Because, yeah, gold's stretched at this level. It's a pretty significant round number. It's a pretty significant level above its, let's say, 60-month moving average. But that's why I published today. Here, gold, yeah, I'm still bullish, but it's kind of more of an indication that, yeah, if you want gold to go higher from here, stock market going down, showing those deflationary forces, which gold loves, is, I think, a key prerequisite now.
Yeah, but what about all the whole physical buying, all the central bank buying that supported gold up front? Is that petered off, and this is just the speculation?
Thank you very much, Alex, for that. Yeah, but that's
you
perfect.
You are welcome.
To me, I look at that as indicative of stuff that you expect in a bull market. Things getting kind of strange, spreads widening out from the U.S. And let's also remember part of the reason we are entering this bull market, we have this significant shift in leadership in the U.S. and a significant, almost unprecedented austerity and tariffs, which is good reason to make the stock market just mean revert a little bit. So let's remember at the end of last year, the stock market capitalization to GDP was around 2 times. Now, to put that in context, it's the highest in about 100 years, and just at the end of 2020, it was 1 times. So if that helps trigger what the administration wants is lower yields, the Fed to ease, lower energy prices, a good way to get that is the stock market. Gold's a primary beneficiary, and I think that's what's kicking it.
So how about anything else? Are the other precious metals following suit here? Is there a way to play this trend maybe through silver or something?
You got it. They're following suit. Gold is beta in the space, and they're all kind of coming up reluctantly versus gold. For instance, silver. Silver is known as the devil's metal. It's known as leveraged gold. It basically trades 2 times the volatility. It's earned that reputation. So if gold's up about 40% in 1 year on your 1 year basis, silver should be up about 80%, but it's up less than 40%. It's being dragged up by gold. So gold's everything. Central banks are buying gold, not silver. And then it's also the industrial metal versus precious metal factor. Gold has been demonetizing silver for 100 years, and silver is becoming more industrial every day. And we all know what's happening with the rest of the world becoming less able to export to the U.S. That's a pressure on their GDPs, most notably from China.
Yeah, and you can see the ARBs kind of blowing out too, like trading LME prices versus U.S. prices when it comes to silver or gold. Mike, the conversation about revaluing U.S. gold reserves mark to market and then using that to help either fund a sovereign wealth fund, et cetera. Are you hearing anything more on this at all?
I'm hearing that a lot. Again, Alex, I think it's just an accounting thing. To me, we still own 8,000 tons of gold. That's not going to change. What's been kind of unique in the crypto space is they've been saying things like, oh, maybe the U.S. will sell some gold and buy Bitcoin. And that was kind of pie in the sky. I think that's kind of silly. But as far as, I guess that could be more fuel for a gold bull market. But at this stage, I don't really need that. I'm more kind of worried about it going higher. And a good reason for it to go higher is just a little reversion in the stock market. Like S&P's back down below its 200-day moving average today. And gold's about almost 20% above its 200-day moving average. So it's getting a little stretched. But that S&P is rolling over. That's all that matters.
How concerned are my good friends, my new good friends in the oil patch, concerned about WTI crude oil at $67? Oh,
it's complete consensus now prices are going lower. And you can see that in the curve. People call it, it used to be called a bull backwardization. That's when the future up prices are lower. Now it's called normal backwardization. Why? Because they know they can sell forward, lock in some profits before they get to the break-even cost, which on average in the U.S. is around $56 a barrel. So yes, there's good reasons for crude oil to bounce recently. We're seeing tensions in the Middle East. And we did get to a 3-year low a couple weeks ago at $65 a barrel. But to me, the whole big picture for crude oil is I don't think it's going to stop this downward trajectory until it gets well below that cost of production around 56, which is around $40 a barrel. And that's not profound because that's what it's done for basically the last 20 years. Every time it goes above 100 too much, it has to get way down. And what's the shift? You saw what's happening with BYD today. They have a car now that can charge in 5 minutes. The world's shifting rapidly. My electric car is 11 years old. And I feel like I'm driving a Model T. I've got to get a new one.